Hey there, good morning, folks. Coming at you with this week's market wrap video. What a wonderful, wonderful week we had, huh? Nice, strong, bullish action. And last week we were, technically or I felt that the market looked like it could move a bit higher, and things didn't look overdone. We hadn't gone parabolic, and as difficult as it is for me to say this, it still looks that way. We haven't. There's nothing technically that says that we can't continue stair stepping higher. But look, it's extremely important to recognize that we are overbought. I mean, we have the T2108 and T2107 indicators, that are registering extremely high. We have the volatility, which is extremely low, and part of the reason that we had, I mean, we're coming up to the end of the first quarter, so you have a lot of money managers, a lot of people that have missed this entire rally. And I have myself have been saying that, look, if you've got profits, this is the time to lock some in. I did stress that you don't want to sell it all, but you do want to start locking in some profits when you start to see some extremes like this. But just because the market is irrational and overbought doesn't mean that it can't stay that way. A lot of times the market will stay irrational much longer than lots of people can stay solvent. So, if the shorts or the bears are continually trying to pick the top in this run, they keep getting their faces ripped off. I mean, look, we've had some very legitimate areas of resistance or of potential resistance that we've been coming up to, like the 200-day moving averages, like price resistance and support, previous price resistance and support, gap fills. I mean, you name it. We keep coming up to these areas of potential resistance, and the market is just slicing right through them. So, let's start out talking about, what exactly happened this week and why. And, the Fed was a big deal, right? So we had a couple of things that were really big deals this week. Number one, we saw a really big move in oil and energy stocks, right? And that's all because of this talk of this potential freeze that's going to happen in Russia next month. Now, fundamentally, has anything really significantly changed? Have we gotten a production cut? No. Have we even gotten an agreement on a production freeze? No. Is Iran going to continue to pump as much oil as it could possibly do to regain some market share? Yes. Have the oil and energy companies eliminated all of their debt? No. Are they making money selling barrels of oil at the current price? No. So look, there are a lot of negative fundamental things out there for oil, but what we had is we had a short covering rally. And these things can be incredibly powerful. And, how long that rally persists is anyone's guess. Now, something to keep in mind. Actually, I just read an article that the Russian prime minister, or whoever it was, doesn't think that this run in oil is sustainable. We saw our first reversal some weakness in oil right on Friday, right at the end of the week. What else did we see this week? We saw after the Fed gave an incredibly dovish statement, which when you think about really isn't a good thing, right? They're losing more and more credibility, it seems like, with each and every Fed meeting. They suggest that they're going to be data dependent. We get data that would suggest that maybe they should raise the interest rate, and they come out and are extremely dovish. And maybe they're seeing some things about the economy that aren't quite as good as they had anticipated they would be. So we had a weakening dollar, right? We had the euro, who is like brings out the bazooka. Everyone isn't thinking that the euro is going to tank, the dollar is going to run, and that didn't happen. Then we get our own Fed, who comes out extremely dovish, which did what? Weaken the dollar even more. And that is good for commodities, but look at what happened with gold. Look at what happened with silver and the miners. Very strong sectors. And will that continue? Well, it may continue as long as the dollar remains weak. Now, oil is something to be very concerned about. If we get a reversal in oil, that could bring down the markets, right? It could bring down a lot of the energy sector. Let's take a look at the XLE. It's coming right up into potential resistance. Okay, so if there's a place to do an about face, this would be a pretty understandable place to do it. Okay, financials, interesting last week. So you have a dovish Fed, which kind of means that they're not going to be raising interest rates anytime soon. You would think that the banks would fall on that news. But guess what? That's not what they did. They actually rose. And they look as though they could potentially move higher. Now, part of that too is the fact that energy did have such a nice move. Well, guess what? Energy had a nice move. There was a lot of concern about the fact that energy exposure by the banks could put a hurting on the banks, right? So you see energy moving higher. You see these energy stocks moving higher. That takes a little pressure off of the banks. Let's take a look at that dollar. You know, we gapped down off of that dovish Fed. And we're at a potential area of support. If this fails, you know, we're going to have to wait and see where the next area of potential support may be. So we had a weak dollar. Let's take a look at, let's see here. Let's take a look at gold real quick. You know, and all week, during the week on my blog, I kept posting, and even last week in the market wrap video, that, you know, gold. What is gold telling us, right? This is a hedge. This is considered an area of safety. It's the safety trade. And what is it telling us? Even though the market is ripping higher, we continue to move higher in gold. And even now, we had a little bit of a pullback. We're coming up into a potential area of resistance here at 122. And, you know, we're pulling back. We had a little bit of a pullback on Thursday and Friday. Maybe we pull back and consolidate a little bit more. We'll come back and test this potential area of support and see if that holds, and then bounce. I mean, right now it appears as though we're consolidating. We're just working this off through time and not necessarily price, right? We're not having a big correction in gold. So gold, the gold miners, right? GDX, GDXJ look very similar to the pattern that gold is making. And let's face it, we have had a major break over a major downward trend. So this could be the beginning of a longer term trend reversal. I mean, nothing is guaranteed, but, you know, we need to be cognizant of that. So, you know, here, let's take a look at the high yield. So we had a pretty established trend, downward trend. You know, look, we were coming up into this area of potential price resistance and thought, well, maybe this could be the area that we roll over. And guess what? It didn't happen. We actually just powered right through it. And then we pulled back, tested, and bounced. Another good sign for the financials, right? If the high yield all of a sudden is looking a bit more healthy, then that could explain why we're having a stronger move in the financials. So can the HYG continue to move higher? Absolutely. If we see some major, you know, bankruptcies announced, or this could turn over and we could pull back and test, you know, areas of potential support, like, the $80 mark or $81 mark. If we break below that and it doesn't serve as support, we may look to come down and test here in $79 area. If that doesn't hold, we may break through and then come down to the $77 area until we find some significant support. Let's take a look at the NASDAQ. There's nothing to indicate. Now, we do have the 200-day simple moving average just overhead, and that could act as resistance. But, listen, until we get up there, and until we find out whether or not we're going to power right on through, or if it really is going to act as resistance, we won't know until after the fact. But it is a potential area of resistance. Interesting that the cybersecurity, we had a pretty convincing downward trend working where we were making, lower lows and lower highs. And now, we've broken over this short-term trend line and have consolidated a bit and look as though we could potentially come up and test this longer-term trend line before we run into potential resistance. So the cybersecurity sector remains an area of potential strength and one to keep an eye on. Let's take a look at the, just for the heck of it, let's take a look at the EEM. Coming right up into the 200-day simple moving average. Markets continue to look strong around the globe, right? EPI, India earnings index. Where's the other one? The BRZU, which is the Brazilian index. And I think we have Petrobras earnings on Monday. That could be interesting for this Brazil Bull 3 times ETF. So pay attention to PBR, their earnings on Monday. That could be fairly interesting and significant for this Brazil ETF. So we've got some strength around the globe. Let's take a look at DWTI. Now listen, if oil does roll over because of the news that we got out of Russia or things, we get a big bankruptcy, in the oil and gas sector, or some negative news. I mean, we actually had a Baker Hughes report on Friday where we had our first increase of rigs. It wasn't anything significant. It was one rig, but still an increase, and we haven't had that in quite some time. So if we do get any kind of bearish move in oil, keep an eye on DWTI because it could present a good trading opportunity. So let's take a look at, we just talked about cybersecurity. So hack is another one to keep an eye on. Had a nice little run, consolidated, actually closed over this trend line. It does have a bit of potential resistance right here at the $24 mark, but hack is another one that you may want to pay attention to as we move forward into next week. Let's talk about the IBB. And this one it really is, to me, at a critical area of potential support. And if we lose it, I think it could get pretty ugly in the IBB. But for now, I have to say it's actually impressing me because it has bounced off of this area of potential support. Now, let's think about this for a second. If all of the money starts pouring out of oil, right? If it does, this run comes to an end and it starts pouring out of oil, where will that money look to go? And I would suggest that, and I'm not saying this is going to happen, I'm just saying this is a potential scenario. I'm going to suggest that IBB, the biotech sector, or the healthcare sector could be the beneficiary of a move like that, okay? The money may move out of the oil sector and into bios, which have been completely destroyed and beaten down because of things like VRX and some other You know, and because of the political climate and all this other stuff, I'm not saying it's going to happen, but it's something to consider. If we can maintain this area of support, and let's back it out to the weekly, and I'll show you why I think it's such a significant area, right? It's a fairly significant area of support. It's at the 200-week moving average, right? It's at the trend line. This is big. This is what I consider a big area of potential support. And if we lose it, it could get really, really ugly in the IBB. So pay close attention to the IBB next week. Maybe we get some clarification on where it's headed. IWM, another one. You know, this sector was lagging, and now it's leading. You know, we broke this long-term downtrend or uptrend fairly convincing. We have reclaimed it. We reclaimed the 200-week moving average, and we're coming up into another potential area of price resistance. We'll see how that plays out next week. Maybe it won't act as resistance at all. We're consolidating. We're working this off through time and looking as though maybe we want to go up and test 110, 112, 113, right in that area. Maybe we come up and we test. Let's just draw a quick trend line here. Look at that. So maybe we come up and test the 200-day simple moving average and this trend line, right, before we find some significant resistance. And we won't know until we get up there and test it. So IWM looks fairly strong. Let's take a look at the IYT. Transportation Index, which led on the way down. Now listen, if oil reverses again, or if oil continues to rip higher, what's interesting about this is that you would think that as oil is ripping higher, the transportation index would be going down because that's one of their largest inputs, right? But no, it's been powering higher. And maybe that's because there's a lot of people that were short within the space, and their resolve is being tested. It broke over this trend line. It broke over the 200-day moving average. It's hard to deny that this has been a powerful, powerful move, and it does look as though it could potentially continue. It's not, although I will say this. Let me back up for 1 second here. We're getting pretty close. We're out of the upper Bollinger Band, right? Another big spike or candle, and we're completely out of the upper Bollinger Band. But MACD histogram's looking pretty tough. Stochastics look, you know, like we could still have a bit of room. I mean, we're getting overbought, but could go higher, right? It's interesting though. Maybe it goes up into this 148 area, and that's where we find some significant resistance. Maybe that's where it acts like some resistance, but we won't know until we get there. So let's go. We've got the IYT. We've talked about energy. You know, mid caps. Mid caps are actually at a pretty interesting point right here, coming up. You know, closed over the 200-day moving average, closed right at this potential area of resistance. The trend line could potentially take that out next week. Let's take a look. You know, I talked last week about Russell, which is the 3x bull ETF. It was consolidating and thinking that potentially we could see a little pop in RUSL if oil continues to run, and it did have a nice little move. But you know, listen, if oil rolls over, the Russell will probably take a hit, and the one that would bounce would be the bearish ETF, the RUSS. Semiconductors, incredibly strong, okay, over the 200-day moving average. Let's just take a look real quick and see if we are out of the upper Bollinger Band. We are not. This is a very controlled move within the semiconductor space. It's a nice controlled move. We haven't gone parabolic, and it does appear as though we could be coming up into some potential price or trend line resistance. We won't know if it really is resistance until we try to break through it. So SMH, for all intents and purposes, is looking pretty darn good and looking as though we could potentially move higher. Now look, if we do come up to here and pull back, that doesn't mean that at the first area of support you dive in, right? We want to see an area hold the support, build there for a moment in time, and then make a move higher, right, to try and take out that major or more significant trend line. It doesn't mean that as soon as it hits your area of support that you just dive right in. Let's take a look at social. Actually had a nice little move as well, right? Closed above the 100 EMA, coming up to the 200 simple moving average where we could see some resistance. Let's take a look at the SPY. Listen, this move is unprecedented, right? And I know that this caught a lot of people off guard. There's no one out there that I've seen that has been saying, yeah, man, you know, jump in both hands and buy everything you can throughout this entire run. Everyone has been extremely cautious, and there are some people that haven't even been involved in this move at all. So, you know, we're coming up into a potential area of resistance, probably somewhere around 210, right? Acted as support, acted as support, acted as resistance. We'll see if 207 to 210 in that range, that band, wind up acting as resistance, or if we wind up just powering right through it. If we power right through it, you know, you're looking at 213 is all-time highs, right? All of a sudden, then we're flirting with the highs. So we're in a very, very interesting spot. This has probably been one of the most hated rallies we've had in quite some time, right? Because everybody has been so skeptical of it that it makes it very challenging to get involved when you're up 5 weeks in a row. It doesn't mean that we can't move higher. So right now, there is nothing technically that is suggesting, hey, you know, this thing is about to completely fall apart. T2107, T2108, you know, the percentage of stocks above the 200-day moving average, we still have a long ways to go before we get to a place where we are extremely overbought. We're kind of in the midpoint range. But, you know, listen, this T2108, the percentage of stocks that are above their 40-day PMA, this thing is like off the Richter scale just about, right? I mean, and we're hanging here. Listen, I don't know how long we can hang up here, but, you know, this is concerning. I mean, like I said, this is not an area where you just want to start, you know, betting the house on trades, okay? You need to, you know, pull that position sizing back a bit when you take these bets or these risks, because you just don't know when this party is going to end. And when they do end, they can be very dramatic in fashion, right? I mean, when they're done, they're done. They can get ugly quickly. So just be really, really careful out there. There's no reason to try and hit home runs on every single trade. You know, there's nothing wrong with hitting singles and doubles. So keep that in mind. Let's see. Solar sector, you know, didn't move as much as I thought it would. You know, if oil continues to go higher, you would think that the solar sector, alternative energy sector, would do well or do better as well. And it really didn't move quite the way a lot of the oil and gas names did. So it's worth keeping an eye on the solar sector. It's not one of my favorite sectors right now, but worth keeping an eye on. And let's see what else we've got going on here. As you would expect, TZA continues to drop. Could be coming up to an area of support somewhere around this $43 area. We'll see if that acts as support. That's the bearish for small cap. Silver had a nice run. Let me see. There's something I want to do. Something I wanted to. Oh, I know what it is. Let me get there real quick. I want to take a look at the OVX. So, this is the volatility within the oil space, okay? And I think it's something that you want to pay attention to as well. As long as this continues to decline, you could see some more stability within the oil and gas and energy sector. If you start to see this spike, that's where you're going to start seeing some fear and some panic come back into the space. So pay attention to the OVX. And while we're on the subject of volatility, let's take a look at the TIVX. And let's take a look at the UVXY. So listen, as long as the market continues to power higher, you're going to see people get more and more comfortable. And I know that it's really, really tempting to try and anticipate the turn of a market, and because we're so overdone, we're so overbought that, hey, it's got to be coming to an end. Well, it doesn't always work that way. So you've got to be really, really careful for these two things. TIVX and UVXY. I really want to see a convincing trend line break with some significant volume before I start getting really involved in these names. And I think that's something that you want to pay attention to. I know it's really tempting to try and anticipate when the market's going to roll over, but the bottom line is nobody knows when that's going to happen or what is going to change the mood of the market. So be really careful in TIVX and UVXY. I know they're making some pretty interesting lows here, but that doesn't mean that they can't go lower. And if they get too low, they're going to wind up doing a reverse split. So be careful. Speaking of reverse splits, let's talk about this real quick. We got Labu. Now, here's another interesting thing. I want to point this out. Labu for the biotechs. Remember, so one of my potential themes or scenarios is that money moves out of the oil sector into the biotech sector, right? If that happens, then Labu could be a beneficiary of that, and LABD would be getting whacked on that if there was a big surge in the biotech. And it's interesting that the LABD has been making some lower highs and lower lows. But what I want to point out here, LABU, I think, is scheduled to do a reverse split this week on the 24th of March. What I find interesting about that is a lot of times when these ETFs do a reverse split, that's about the time that they actually take take a nice move higher. And I'm going to give you an example of this because we just had a reverse split in UWTI. What do we have? We had a 1-for-10 reverse split, right? They did the split, and look, had a nice little pop. Now, granted, this was already moving and trending in an up direction, but we had pulled back on the reverse split, and now look where it's at. It's moved higher. I'm not saying that that's going to happen with Labu, but it could. Something to consider for next week. Let's XBI, I'm going to pop through these. I know this one is, this video is taking a little bit of time, but I think it's really important that we go over this stuff. So XBI, you know, kind of looking as though it's in an area that could be interesting. Like I said, that's the biotech, so I think it's worth keeping an eye on. Home builders, you know, home builders. This one is personally crushing me because of the fact that, you know, I knew we were coming into the spring season. I had a particular home builder that I wanted to buy. BZH had the plan, had the layout, and I was too stubborn with my plan. I mean, it got close to my entry, but I did not get my entry. It was for a swing trade. And this, you know, this personally is hurting me. But anyway, nice move in XHB, right? The whole sector, you know, think about it. Home improvement coming into spring, spring cleaning, you know, Home Depot, those guys continue to do well. Home builders could continue to do well. They've had a nice move higher. You know, we could see a bit of a pull, but that may be a sector that you want to continue to keep an eye on. Let's take a look at materials. You know, beautiful, beautiful move in materials, and close over the 200-day moving average. Maybe getting a little stretched here. Let's take a look. No, nice controlled move higher, well within the Bollinger Band. We are a bit overbought. However, it doesn't mean that we can't continue to grind higher. XLB actually looks pretty good. Let's take a look at the XLE, like we already did. We talked about that one coming up into resistance. XLF, you know, got the 200-day moving average. Let's take a look at industrials, which have had an incredibly strong move. So look, here's a perfect example. You know, okay, hey, this 200-day may act as resistance. Yeah, it didn't. And then it did actually act as support, pulled right back to it, then busted out. Let's take a look at this on the... Okay, so we're getting a little interesting here, right? We're piercing the upper Bollinger Band. So what would we want to see now? We would probably want to see if we get, you know, I'm not saying that this run is over. We could have a little parabolic spike or something, right? Maybe come up and test the highs or something like that, or come up into $57 range, somewhere in that, and then pull back. But what do we want to see on that pullback? Well, probably like to see this area at $54, $55, or $55 in that area. We'd like to see that hold as support, right? What was once resistance hopefully then becomes support. So we get a little pop here and then a pullback and hold as support here right around the 54 mark or 55 mark. And, you know, like I said, you don't want to just start diving in. You want to wait and see if it holds here, you know, maybe bounces a little bit and then tries to move higher. That would be a nice healthy move. All right, so let's take a look at the technology, still grinding higher. Although, look, it does look as though, at least on this particular chart, as though it's getting ready to, the stochastics are crossing to the downside. We'll see. Utility, insane move in the utility sector. And another area that's considered to be the safety trade, right? Dividend paying, blah, blah, blah. All right, this is already looking, though, as we're going to get maybe a bit of a pullback. We'll see if it does pull back, and if this area, say $47 or so, actually, you know, I probably would be more, yeah, around $47. See if that holds as potential support. XLV, the healthcare sector. So, you know, this is one of the sectors that has been really, really beaten up. It is oversold. So, again, sector rotation, money flow. Could this be an area that money would go into if, you know, the hot sectors like the miners and gold and oil roll over? I'm not saying that they will be. I'm just saying it is a potential scenario. And kind of interesting, you know, pull back to this little trend line here and bounced off. You know, see if we get any kind of a continuation or follow through or any money flow into that sector. Consumer discretionary, you know, powered right through the 200-day moving average, powered through the 200 EMA. It's you know, it looks as though maybe it could consolidate a little bit here. Potentially it pulls back, and You want to see if this $77 area can act as support. If not, it may come down and test 75 or so, and if that can't hold, well, we'll see where it can. XME Materials again, right? Beautiful little setup. I mean, climbed right through, powered through all these moving averages, and then flagged out, and boom, right? Started to break, and look at this. Stochastic is just getting ready to cross to the upside, right? A lot of accumulation going on in this sector. You could see this could be the beginning of something much bigger, right? It's been in a long-term downtrend for a very, very long time. Let's back this out real quick to, okay, so let's draw an even longer term trend line, right? And give ourselves some kind of an indication as to where we might see some more resistance or some support, right? And let's just see something here real quick. Yeah. So, look, I'm looking at this. Broke up above, right? And then it kind of acted as support right there. Acting as support right there. Right? And then finally break down. So, maybe a really good area of potential support or resistance would be in this 25.72 area, right? Coming up into it, which pretty big, pretty decent size move from where we currently sit, right? So I think it's worth paying attention to the XME for sure. And let's see, XOP, oil exploration, closed over the 200-day, oh no, I'm sorry, that's the 100-day moving average. We could consolidate here, work this off through time. We did break this trend line, which I think is fairly significant. Okay, maybe we consolidate here, see if that trend line acts as support for it moving forward. And then let's take a look at XRT, the retail industry, which was another one of my big concerns because we had broken the long-term trend line with such conviction, and we've reclaimed it, man. I mean, it's hard to deny that we have had one incredibly powerful bull run, and I think it has caught a lot of people off guard. So coming up into some resistance potential resistance on the weekly. Let's take a look at that daily. Consolidated nicely. Closed over the 200 EMA, or 200 simple moving average, I'm sorry. And, right now it looks as though it could go higher. And then let's see, XTN transportation again broke over this trend line, and broke over the 200-day moving average, closed at the high of the day, looking pretty strong there. Let's take a look at but we are piercing that upper Bollinger Band. So, caution is suggested in the retail sector, or the transportation sector, I'm sorry. And let me just real quick, there's one other area that I was looking at this. Maybe it's ITA. Yeah, aerospace and defense. Coming up into an interesting area on the daily, right? Coming up into this trend line here. And it's getting a little out of it's piercing the upper Bollinger Band. So if there was to be a pullback in the aerospace and defense industry, this would be a place that would make sense. Doesn't mean that this is going to act as resistance, just coming up into it. So, a lot of the aerospace and defense names, look, they're mammoth companies, huge amounts of shares, slow movers, more of long-term trade, long-term hold investments and swings than they are day trades. But, just something to note about the aerospace and defense sector. Okay, that's it. I know this is a super long video, and I apologize, but there is a lot to go over. And listen, I've been, on the bearish side, and honestly, I still think, and I'm gonna go back to this again. I still think that fundamentally there are a lot of things happening under the surface that aren't really good and positive for our economy moving forward. And one of them for sure is, whoever's going to be our next president. I mean, I don't know about you, but I'm not comfortable with any of them. And that is concerning to me. But, look, we could continue to move higher, grind higher into, selling may go away. We could continue to grind higher into September and October, which are, typically the worst months of the year. No one knows. And if they did, they wouldn't be doing videos like this. They'd be sitting on their own island somewhere, living up life with their crystal ball. So I have been bearish. I still think fundamentally there are things that are bad that are going on out there. Layoffs, CapEx reductions, companies leaving, moving corporate offices to overseas, which is going to hurt us from a tax standpoint of what we can collect. I mean, there's a lot of things that just aren't very positive. But guess what? Those things don't matter when momentum is in play, right? It's about what's happening and not what you think should happen. So keep that in mind. Good luck trading next week. Let's see how this all plays out. At least technically, we still look pretty bullish, but keep in the back of your mind that at any time that could reverse in a heartbeat. So just be careful. And don't be, listen, if we do have a reversal, don't just all of a sudden start shorting everything. Okay? Be patient. Get confirmation that we are breaking down before you start shorting. Okay, that's it, folks. I will be doing the live Ticker TV stocks to watch tomorrow morning, 8 a.m. Vegas time, Ticker TV. Join me there. If you can't make it and you've got some stocks that you'd like me to check out, send them to me. Email them. Twitter me. And I will do the best I can to make sure they get on that Ticker TV session tomorrow morning. Okay? Enjoy the rest of your weekend. Be safe. And I'll either see you tomorrow morning or I'll see you next week. Hey, and don't also forget the chat room, Trader's Den. It's pretty happening, man. Good stuff. Lots of good stuff going on in the Trader's Den. So come by and check it out. It's free. All right. Buddy says goodbye too. All right. See you guys later.